CME Group launched Micro E-mini Futures Contracts. Discover how a smaller Micro E-mini Futures contract opens the world to greater trading possibilities.
Welcome to Market Movers. I'm Jim Urio with Bob Iacchino. So good to have you, Bobby.
Good to be here, Jimmy.
Okay, so we are a week away from a much anticipated FOMC meeting.
Right.
What do they do? And please support your answer.
Well, I think they're going to do 25, but as I mentioned to you in off-camera conversations, I think that's the start of a rate cut cycle. I don't think it's going to be a one and done. I don't think they're just correcting a last year mistake.
Okay, and I agree with you. I think they're going into a cycle too. But are they more dovish than they actually should be? That's actually warranted by the current situation?
Well, I don't know how valuable it is for me to give my opinion of what they should do. I just look at the curve, and the curve's been going from, it was negative 3 month to 10 year, was like negative 23. It went as low as negative 3, and now it's back out to negative 7. I think as the market anticipates less cuts, we get more of an inversion.
I like that. Now, before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. When we price these out, the 10-year September contract is trading about 127.21. Bobby, what do you got?
Well, I want to be long the 10-year, and the reason is I think that they're going to do this 25, and I think the market's going to kind of be a little bit disappointed in
Right,
that.
okay, that makes
So
sense.
the example I want to look at is buying a week 1 August 128.50, 129 and a quarter call spread, 1x2 for 3 ticks. This trade example risks $47 to make a potential $753 max risk, being short at 129.25, which I don't think is going to hurt you too much.
Okay, so it's buying the one, the early one, the lower one, and then selling the 2. So
Right.
you have that one naked call sell that you could be assigned and be short.
Right. You
so
do
if
have
you're
a little bit of risk
If
there.
you're willing to accept that risk, and we're traders, we
Right.
are long and short the market at times. I understand that, and I like it. And I actually looked at something that's quite similar. I think they're too dovish, but that's neither here nor there. I think they'll go 25, and I think they'll be disappointed as well, and that's why I think that the 10-year is going to rally a bit. So as an example, I'm buying the week 1 August. That's the same expiration as yours. Now this is the 128, 128 and a half, 128 and 3/4 broken call fly for 3 ticks. It sounds complicated, but it's not complicated at all. What I'm just saying is buy the 128, 128 and a half call spread. That's a 50 tick wide call spread, and sell a 25 tick wide call spread, the 128 and a half, 128 and 3/4 call spread against it. So it's like your 1x2, except it's buying an extra call, so you're not just naked short. Now you can buy that for 3 ticks, risk 47 to make a potential 453. The reason I love the ratio of it, the 50 to 25, because even if the market runs away to the upside, you make all this call spread, lose the 25, you still make 25 minus the 3 ticks you paid. You like it?
So 2 things. Number 1, I hate saying this. And number 2, I like yours better than mine.
Okay.
And here's why. I think that I think I'm right. I feel very strongly about what I believe is going to happen here. But if I'm wrong, it's going to be a blowout. And you've got that protection. And the reason I say that is because the curve is going to invert, recession risk goes up again.
But also, at any time you have your trade on, you can always convert that into a fly as well. You know what I
Absolutely.
mean? As
Absolutely.
you trade around it and hedge your risk. Okay.
Yeah, and I'm much more active than the average person, so I could see doing that. But I think for the average person, yours might be a little bit better of a
Okay,
trade.
final question. For the whole year, do you think 3/4 point rates, is that what you were alluding to a second ago?
Yes, I think 75 basis points for the rest of the year, possibly 1 next year.
I think too. I think 75 as well. Thank you for joining us on Market Movers. I'm Jim Urio, where we are helping make you a better trader.